Okay, good afternoon, good morning, and welcome to everyone who's joined us today. And thank you for that, and welcome to the third in our webinars series, and the second to focus on specifically on the PBSA market in the UK. I'm Matt Denness, I'm Head of Investor Relations for IPIM, and I'll be leading today's discussion. All of us who operate in the sector knew that this year, or the 2021 year booking cycle, was going to be a busy one, but none of us envisaged what was to come with regards to COVID, the COVID pandemic, and the impact this would have on the global economy and on the perception of PBSA. While we may see some alarmist media coming out of the UK, we continue to believe that the underlying fundamentals remain very strong for the sector moving forward. So to help us dig deeper and to explore the current situation and look at the future and provide further insight into the sector, we have some of our key partners with us today, all of whom have great experience in the UK PBSA marketplace. Joining me today for what promises to be a very interesting discussion are Andrew Whiteley from Maven Capital Partners, Raj Kotecha from Amro Real Estate Partners, and Daniel Radner from the Mansion Group. And then from the home team today, we've also got Selina Williams, our Group Head of Investments. Welcome to you all, and thank you for joining me today. Just a little bit of housekeeping before we move on. Please, as we move through, if any of you have any questions or would like us to be answered, there's a Q&A button on the screen. Please type in the questions, and we'll endeavour to answer as many as we can during the session or the Q&A session at the end of the webinar. Any we aren't able to cover, we will get back to you later, back to you directly. We'll also be recording the webinar, and it'll be available for the next few days. So without further ado, let's get going and look at the current situation in the marketplace. And Andrew, if I can start with you. The current situation in the UK has created many new challenges for universities, operators, and students, and it's fundamentally changed their experience. What's your view on this and the take on the market right now?
Well, it's certainly been an extraordinary 6 months or so since COVID really started to affect the UK back in March. And the first thing we had to do, obviously, in our student accommodation, our operational student accommodation properties, was to respond first and foremost to the needs of the students, to ensure that we were providing, and our operators were providing, secure, safe, hygienic environments, to ensure that those who needed to stay, because maybe they couldn't travel home or for other reasons they needed to stay in the accommodation, and all of our accommodations did stay open to those who needed to stay, to ensure that they provided safe, secure environments, and that all their welfare requirements were taken care of. We then had to look at issues around things like refunds, where students legitimately felt that they shouldn't be paying rents for when not being in occupation, but also ensuring that the business continuity of our assets was assured. We then got to later in the year with the traditional sort of A-level results period, and looking at what was going to be happening, going into the new academic year, with a strange situation with A-level results, where exams hadn't taken place, with grades being downgraded, and then responses and the sort of controversy that surrounded all of that. And we've had a very late clearing period. So I think before the A-level results came out, something like 70% of students still hadn't confirmed their places and organised their accommodation for the forthcoming year. And so there's been a very late clearing period, with students scrambling around trying to find places on the right courses at the right universities. And actually that's still ongoing to a certain extent now. We're still seeing some students tying down places. If you look at the sort of official UCAS data, I think they're reporting that UK student applications are up something like 4% on the previous year. EU student applications are down, but I think that's part of a sort of wider trend with Brexit. But that international student applications for UK universities are actually up circa 7%, and that's a large part of our sort of target market for a lot of our studio-led accommodation. Now, the reality on the ground is that while applications are generally up, we as operators and actually the universities themselves have had to introduce a lot more flexibility, especially for postgrad students coming to the UK to study, of which about 50% are typically international students. A lot of those courses now have been pushed back to January start dates. So whilst applications are up, we are seeing, I think, right across the market, a greater number of voids in accommodation right now. Not substantially so, but I think, you know, we're across our portfolio, we're at sort of 80 to 90% occupancy, whereas in all previous years we've been at 100% occupancy in all of our properties, and we're expecting to see that those voids will start to fill up over probably from January onwards, when those international students hopefully are able to arrive to commence their postgrad studies. So with all the change, I mean, we're seeing the beginning of the second wave in the UK now. We've seen some controversy around how students have had to the sort of how lockdown has affected students, and news reports of students being locked down in accommodation for days on end. And it's a difficult situation. We're always speaking to our operators to ensure that they are providing the support and the welfare, and giving students as much support as possible. I think what we're seeing is that we are starting to see the odd case of COVID in accommodations. Mm-hmm. And where that happens, students have to remain in isolation for a period of 10 days. But generally speaking, all of our ground floor communal spaces remain open. For example, you know, we're only typically allowing one student at a time into the gyms. There's a lot more control. We've got sanitizer points in all of our accommodations at various places. So we're having to constantly adapt. And I think it's no surprise we're seeing reports of places like Manchester, Liverpool, Nottingham, Glasgow, Newcastle having significant outbreaks of coronavirus. And I think it's impossible to escape the fact that these are cities that have major student populations, with students who've been returning or arriving at these cities over the last 3 or 4 weeks. It's no surprise, I think, that these are the areas, particularly in the north, where the COVID numbers have really been on the rise.
Sure. Okay. Well, yeah, I guess we'll come on to in a bit more detail about what's being done for the well-being of the students and the more detail on that. But Raj, from your perspective, are you finding similarities there, or what are you finding the universities are worried about filling the spaces and attracting new students? And what's the likelihood of further students coming in later this semester, maybe early next year as well?
Yeah, so I think as Andrew's mentioned, we've had a very similar experience. So summertime has been spent very much refining our protocols and preparing for the intake and the what-if scenarios of what could happen. We have seen a similar experience of quite a late booking cycle. So a lot of uncertainty with the way the A-level results were handled, a lot of uncertainty with students committing to their contracts. And what we've found is also that we've had to be quite flexible in terms of our tenancy start dates, our tenancy contract lengths, etc. But having done that, our experience in terms of occupancy across the assets we manage ranges between an 80% through to 100%. So we're certainly sort of down on a normal year, but we're still I think achieving a level of occupancy which, given the very unusual circumstances we're in, I think demonstrates the value that this type of accommodation can provide to the student. We are currently dealing with one student who's tested positive, so we've implemented and tested our protocol, and the student is in a flat that's isolating, and we are providing all the assistance to that flat in terms of services and shopping, etc., etc. So I think it's as Andrew said, this is probably the most challenging year to be an operator, I think, and it's definitely a year that's going to require a lot of adaptability, a lot of flexibility, and I think a lot of really dealing with situations in quite sort of short lead-in times, and having to deal with that. So I think that's the test, I think, of a good operator, and it's probably a good test of the market as a whole and the value of this product to the students. Regarding January intakes, we are seeing some inquiries now coming through. We've seen a number of our partner universities push back course start times to January, so we are expecting to fill some of our void through intake in January, certainly.
Okay, fantastic. Thank you. And I guess we've all seen that, the numbers are up. Was it 3.5% up on last year? 460,000 students being accepted. Daniel, for you, I mean, how are you finding the current student lockdowns, the outbreaks? Are these affecting the students, and is this affecting their decision-making process on coming back to university? And what are you finding the universities or operators doing to really attract and retain the students at university?
Well, I think it's definitely having a significant impact on the decision-making process. What we've found is, and I suppose in line with what Andrew and Raj have said, and what we've seen about Unite and their recent figures on the lettings, is that it's not a million miles off previous years. So we're ranging between the 80 and 90% mark. Again, some of the properties are fully let, some of them are on the lower end of the scale, and we find that those which appeal to more international students are the ones where there's a significant challenge. And we've seen the UCAS numbers, we've seen that the number of applicants is up, and I don't doubt that these students have started their education, but they're not moving over to the UK. So they are dealing with everything, learning everything online at the moment. And whilst there's discussions about January and people coming over, and we've had 2-3 universities looking for nominations starting in January, we've got lots of agents showing a lot of support. These are the international agents who provide the full service to the international students, including sourcing accommodation. So there's a lot of interest there. But I think we all need to be realistic and think we're in October. We probably thought we'd be slightly more progressed by now.
Yeah.
In January, are we going to be in the clear? I don't think anyone believes that we are, but I do think that there will be more students coming along. They'll either come to the realization that the UK is no different to anywhere else in terms of risk and exposure, and that the universities and the operators are dealing with it correctly, and therefore they may as well move on over and get more of an experience, or collectively people are going to realize that it's something that we have to deal with, as opposed to wait for some magic solution. Mm-hmm. I think from an operator perspective, and the management group, we've been around since 2007, so we've got a fair amount of experience. A lot of what we provide is both a bed for them to sleep in and also the care in the environment for them. And that has been challenging this year in a different way to previous years. And it's sometimes the smaller things that you might not necessarily think about or pick up on. So we have students, many hundreds of students checking in. First of all, we need to strategically split those over a period of days to make sure that there aren't groups of people amassing around the staff there, which again, we do usually, but it reduces some of the buzz and some of the atmosphere of lots of parents and children coming together and having that full experience. And what we then do is we give them a tour of the property, which again, we can't do. So we have to effectively give them a key and give them a directional map of how to get around the property. And therefore, we've had to supplement that with lots of other, I suppose, assisting technology. So, for example, we have an app which they can use, which has a welcome pack. It has information on where they can find doctor surgeries, where they can find shopping facilities, where they can find everything within the building. We then follow up with Teams calls and video calls to make sure they've settled in correctly and that they're not feeling lonely and isolated. We then have special measures and calls put in for those students who are self-isolating. We've had a fair few cases of those where we need to provide food delivery services, where we have to take away the rubbish, put it in the bin for them. So there's lots of additional measures that we have to take in order to make sure that the transition from home to student accommodation is as smooth and as comfortable as possible. Now, it's not going to be the same as previous years, and the students won't necessarily have the same experience, but we're doing everything we can to make sure that they are as comfortable. And the students on the whole are very understanding. They've lived through this the same way we have for the past 6 months. They're relatively mature grown-ups. They understand the situation, and I think they appreciate the little additional help that we can provide.
Sure. So I guess the challenges that it's thrown up are being met by all operators and rising to give, I guess, the students the experience as close as possible they would get in for want of a better phrase, a normal time. And that's being met across the board by all operators to make sure that they retain the numbers and students are well looked after. But do you see the situation at the moment? Is it a short-term blip followed by a surge next year with the international students coming through?
I mean, I'm very much of the view that the fundamentals of the sector haven't changed, and I think the guys will agree with me. Whether or not we see that rebound next year, I don't know. I think a lot of that depends on what happens with the pandemic and the virus, whether there's a vaccine or whether we've learned to live with the new normal. I think in the medium term, we are very bullish about the sector. As you can see, I mean, evidenced by the fact that student application numbers aren't down. The UK is still a top destination for both domestic and international students. Although we're selective about markets, it's certainly not the case that every single university, town and city in the UK has a supply-demand imbalance. There are still some very compelling cases for the development and operation of student accommodation. I think in terms of the occupancy numbers coming back, yeah, I mean, as I said, I think, will it be next year? Who knows? Who knows?
It's that $1 million question.
Yeah, absolutely.
Well, you're finding resilience in the sector, though? Sorry, Andrew, I interrupted you there.
No, it's fine. I mean, the fact of the matter is that we this year, I think it's actually this year that we're seeing the lowest number of 18-year-olds in the UK population, and it's forecast that over the next 10 years, the number of 18-year-olds, it's not forecast actually, it's a fact. We know how many 18-year-olds they're going to be next year and every year for the next 18 years, I suppose. So that's due to rise year on year. And up to, I think in 10 years time, they're expecting there to be something like 150 to 200,000 more 18-year-olds coming out of school than there are this year. So that sort of supports the longer term strength of the university and the higher education market in the UK. Plus the fact that I think it's true that for the first time this year, more 40% or more of 18-year-olds are participating in higher education. I don't think we've ever had a year where 40% of 18-year-olds are participating in higher education. So you're seeing more and more children coming out of school who are choosing to stay in education, and it's difficult to see why that trend should go into reverse. And of course, if we're starting to see some quite stark unemployment figures coming through in the UK now, and if we find ourselves in a recessionary environment over the next couple of years as we recover from the situation we're currently in, and the employment market for young people either coming out of school or coming out of university is looking more challenging, then I think it's fair to say that we can expect to see continued participation in education continuing to grow. And that's certainly been the case with past recessions, where we've seen in recessionary environments more student numbers have increased.
I was going to say, if you look after the GFC, the global financial crisis, the number of students that those 2 years post that, the increase in the number of students, we're not just talking about 18 to 20-year-olds, we're looking at people who've come out of employment, who are going back to university to better themselves, to re-educate, to retrain. So would we see that in the next few years as well, complementing the 18-year-olds, and possibly as the international market opens up again, we can see the surge of international students coming back, because quite frankly, where else can they go to a certain extent? The US is shut off and so is Australia.
I think another question, just considering the sort of longer term outlook for the sector, is a question that's been asked about many different areas of our lives. For example, is it the death of the office? Is it the death of in-person retail? Are all students going to study online now they've realised they can? And therefore, will these international students just study their degree courses remotely going forward, and hence reduce demand? I think experience has shown that psychologically, when we come out of major shocks to the world, for example, post 9/11 or post SARS, things that people enjoyed doing, they return to very quickly. And I think it goes without saying that university isn't just about the academics, it's not just about studying, it's also about that whole experience.
Yeah.
And one thing we are seeing across our portfolio is a variation between cities depending on how the university is addressing it. So some universities have taken the view that this term, almost everything will be online, apart from, for example, laboratory work or medical degrees, where they really can't be online. Whereas others have said, okay, whilst large lectures will be delivered online to avoid group gatherings, smaller seminars and smaller group teaching will continue to be delivered in person. And at those universities, we have seen more international students returning to campus, because they know that that's an essential part of the experience. And then in addition to that too, of course, there is the social element, which whilst not the same, there haven't been big sort of freshers parties. Universities have been coming up with unique ideas. For example, socially distanced hiking, for example, so students and freshers can get to know each other. So I don't think we're going to see a long-term trend to remote distance learning as the norm.
Matt, if I can just add on to that, I mean, just I take comfort probably from two metrics. So one is the one Andrew's mentioned, which is the demographic trend of the increasing number of 18-year-olds. That's for anybody on this webinar who's not familiar with those stats, it's really worth looking at. It's very predictable, it's very accurate, and actually it's very significant for the growth of demand for PBSA. And the second, I think, experience that you can take comfort from is the 2012 experience of university tuition fees tripling from 3,000 to 9,000 a year. In most product categories, if you triple the price of a product, demand can be surely predicted to be to be dramatically lower. And in this particular product, 2 years later to 2014, it was back to where it was. So this is a product which is very inelastic in terms of demand. So I think if you put those two things together, that gives you a lot of comfort in terms of the prospects at least over the next 6, 8, 10 years. I think longer term, will the manner in which people study change? It could do 30 years, 40 years out, but I think the medium term is quite predictable.
Sure. Actually, it's interesting you mentioned that, Raj. It's something I was going to bring up about the student fees, because we've seen other crises where we thought, oh, this is all going to collapse, and it hasn't, as you say, because of the demand for education. And I guess the structure in the UK and the support that the UK government is giving to the sector as well to keep that moving forward. And as we enter that normality, something that Selina, I just wanted to pick up on what Selina mentioned there, is about the facilities. And maybe Danny, you can chip in on here as this one as well. It's not just about the facilities, it's about how they make use of those facilities and moving forward, keeping the students there with those facilities as well and moving forward.
If I go first, then on the university side, I think going back to the point about the increase in fees to £9,000 and the facilities that provided, I think that's one of their biggest challenges at the moment. You've had students who have complained about the fact that they're paying the full fee, but they're not necessarily getting the full service. And the universities are really trying their best to provide all sorts of additional services. I mean, looking at a few of the universities that we operate for, they're putting all sorts of online activities, online sports sessions for staff, for the students, and they're really trying to provide more than just the education itself. But will this change in the long term? I don't believe so. And part of that is because before the pandemic, people weren't necessarily complaining about the status quo and saying that it's broken and it needs fixing, it needs more of an online focus. Everyone was happy with it. It's just a short-term adjustment that people are having and the universities are having to take in place. And from speaking to a family member who's a lecturer, he was saying that the online lectures are, in his view, far less effective. Although the delivery of the content can be the same and people can make notes and record it, and there are some advantages, there's no real interaction. You've got a whole group of students. None of them are putting their video cameras on because they don't want to be seen in whatever location there might be. And there's no questions and answers and interaction between the lecturer and the students. So I think whilst there are the services that are provided to plug this gap, and there's how are those services being used, I think it is going to revert back to what we have seen in previous years, because it benefits both the university for justifying the fees that they provide and having the student engagement, and for the students because they have that engagement, that social aspect, and what isn't necessarily in the university brochure, but what they all go to university for. From an operator perspective, we've always been of the view that it's important to have more than just a bed. You need to have the right environment and atmosphere. And some of that comes from the additional amenity space, common space that's provided. And again, at the moment, that's a challenge because in almost all of our properties, we've had to close it off because it's very difficult to not necessarily monitor. You can monitor it, but you can't police it. And you need to make sure that it's a safe environment. So again, it's a case of the students enjoy the ability to congregate, to socialize, to play some pool, to watch a movie together. The services and the provision is not there at the moment, but again, we believe that it's a short-term situation and everyone will want to revert back to how it was as soon as possible. Going back to what Selina says, it's things that people enjoy. It's things that people look forward to at the end of the day.
Sure. I think you're right. I mean, looking at it outside in, we've got to that stage where there's an acceptance of where we are. With the challenges are being met, both from an operator, from a student perspective, from the university perspective. I mean, and it's identified that there is a resilience in this sector that we all know about and we all talk about. Putting those 3 points together, how do you see this moving forward? I mean, there's greater interest in movements in the market from a buying, selling perspective on PBSA assets, moving through this year into next year as people do start to return to university as we expect them to do?
I think at the moment, it's fair to say that there's not as much activity in terms of buying and selling. Many potential buyers and vendors actually are taking a wait and see approach. There have been deals, a fair number of deals complete during the pandemic. But what we have been seeing is quite large rental guarantees offered because of the uncertainty around the short-term income. So not so much an impact on valuations, because I think there's a general consensus point of view that this is a short-term impact and values haven't been impacted, but uncertainty over rental income for this year. So, you know, as we mentioned, we've got occupancy around the sort of 80–90% level. However, we don't know what's going to happen next term. Will there be another national lockdown? Will universities be made to close? Will students want to return home and stop paying their rent or ask for refunds? And that's what investors have been asking for. So until we see a little bit some more clarity, and we either are sort of moving to live with this situation or the pandemic goes, I think that's what we'll see. However, in the longer term, I think that this is going to have a positive impact on investor demand for residential-led schemes, and by that I mean both student accommodation, also other sectors such as build-to-rent residential. And the reason for that is because of what's been happening with sort of more traditionally mainstream sectors of offices and retail. Whilst I certainly don't share the view that this is the death of the office, I think that more people will work from home on an ongoing basis because they like doing that. So yes, they'll return to university accommodation because they like being in the thick of it, but a few days working from home per week, meaning the employer needs less space, I think we'll see that. So, and retail, of course, retail's been very badly hit. So I think what we will see is more investors and more institutional investors increasing their allocation of their real estate allocation to own more student accommodation and build to rent schemes. And that can only be a positive thing for future growth in the sector in terms of the capital values.
Yeah, I would echo what Selina says there as well. And I think if you look at the various investment classes at the moment, it's one thing that obviously the pension funds are finding very difficult at the moment is achieving yield. And student accommodation, UK student accommodation certainly provides a sort of quite healthy risk-adjusted return, a good risk. A very strong risk premium and yield premium over gilts. I think you'll probably find that the student accommodation yield at average circa 5.5% to 6% over gilts is probably at a near all-time high in terms of the differential. Purpose-built student accommodation now is regarded as a mature, established sector. It was a sector that institutions previously were nervous of because it's generally speaking now largely an operational asset without a fixed lease in place. But it's matured. It's become more acceptable. A lot of the pension funds and large institutional funds are looking to increase or establish their exposure to the sector where they haven't previously. It provides a good level of diversification because if you've got a scheme with 400 beds, It's not like an office where you can have a single tenant that will go bust and you've lost all of your income. You know, there's always going to be a high level of occupancy, and not all of your students are suddenly going to stop paying rent. So it ticks a lot of boxes from an institutional investment perspective. Of course, as far as, you know, we've still got weak sterling. So for international buyers, again, it provides you know, a good entry point into sterling denominated assets. So I think there's a good compelling story behind purpose-built student accommodation, together with the demographic factors that we talked about earlier. There's a good compelling story there.
Interestingly, I've had a couple of calls from lending banks recently who we've dealt with in the past to see whether there are any transactions in the pipeline, which is always a positive sign. I think they were quite keen to look at stronger locations. But again, the fact that they've been through their current loans and sorted everything out in terms of payment holidays and other such activities that have been keeping them busy over the past few months, and are now ready to write new loans, and that they've selected the student accommodation sector is always positive. Shows a level of stability and security.
It certainly does, and as Andrew said, I mean, it's a maturing market, but one that also has, I think, has a really positive future. It's not mature. We come to the end of it. There's a lot of growth left in that as more and more of these, as you said, large institutions, pension funds reallocate into the sector and provide that dynamic growth within that as well. Dan, just to pick up on something you mentioned there, it's just a question that's come in. Whether you want to answer this now, is any ideas of cities that have high occupancy rates in PBSAs and cities which are black spots? Sorry, a bit of a diversion, but it's someone sent 2 questions in on that one, so I think they're quite keen to know. You know, are we finding this? Is it city by city, or is it an area, or is it first tier, second tier universities? And I guess we can look at that and say, okay, if we can identify that, does that then lead on to where we see, again, further growth within the sector?
Yeah, I think it's a question that's been discussed for years and years, which locations, which cities, and there are definitely areas where they're not necessarily on the blacklist, but people frown upon them because there's been high levels of development recently. But even in those locations, and the way we as a company always look at acquisitions is you have to look at each individual property on its own merits. And you could have a fantastic location, but a poorly located in terms of micro location property, and it might have the wrong pricing structure, it might have the wrong room setup. So if you have the right location, the right bed type and configuration, so studios and clusters for that specific pocket of the market, and that the pricing is right and the services are there, then I think you can almost put to one side the location itself. There will be some tertiary cities or tertiary towns where they have a very weak university and there's concern about the future longevity of the university itself. Those are clearly at risk. But aside from that, there are far more factors than just the city itself that we need to take into consideration.
Mm-hmm. Thank you.
I'd also add that it's cyclical. So whilst there may be a perceived oversupply, I guess what usually happens is developers spot an opportunity, but they all spot it. So there's quite a lot of building in a particular city. Growth isn't keeping up. Maybe it takes time for the sort of trend of students preferring PBSA over HMOs, that's student houses. And so then there might be a period of time where there appears to be an oversupply. And then developers stop building because land prices fall and it doesn't make sense in that location for a while. But during that time, then, of course, demand catches up again. Mm-hmm. So it is cyclical, much like other sectors of real estate. City offices, for example, in London, it's typical. And I think you see similar in students. So somewhere that may have had an oversupply a few years ago could be a compelling location to invest now, and vice versa. Somewhere that was a top location might take a bit of time to soak up, to absorb the new development, because so many developers have spotted the opportunity there.
Sure. Okay, thank you. That's interesting you mentioned the HMOs. It's a question that was posed to us just before this, is what's the advantage from an investment perspective, I guess, from PBSA against HMO? And are more PBSAs being built now to counter that?
I think one significant difference that I always think about is from a safety perspective as a parent, to have your child move into sort of a house on a normal street that's been split into several different rooms and is generally unattended to, is very different to PBSA, where you have regulatory safety tests and checks every week, fire alarms tested, systems in place for evacuation, security, staff, everything else that you'd expect in a community of young adults. That's such a massive defining factor between the two that it's, in my view, almost not comparable.
Yeah.
All right, Andrew, you were slightly quiet there.
Yeah,
Andrew.
I'd agree with that comment. I think they're almost sort of turning into two quite different products, and both, you know, there is the typical scenario is a first year coming into PBSA, second year into an HMO. So they provide different experiences for the student at different phases of their university life. Traditionally, students would remain in HMOs in year 3 as well, but we're seeing, I think across the board, the PBSA operators are seeing more and more third years coming back into PBSA for the final year of their degree. So I think, as Daniel says, they do provide two very different experiences. I think particularly for the first year experience, PBSA provides a very secure, safe, and a predictable starting point for that university experience.
Mm-hmm. Interesting. And from your perspective, I mean, this is another question that's come in. Are you, based on the current situation and how long it takes to settle down or reach a norm, are you deferring future investments decisions on this, or it becomes clearer? And if so, how long are you waiting for that to turn around?
We're certainly not deferring decisions. Our house view is that this is a short-term challenging year. We think next September will be subject to, you know, medical issues going as we would anticipate. We think next September will be a good point in the market again. If anything, I would say that the fact that many operators are reporting 80% occupancy in probably the most remarkable set of circumstances that we're ever going to see is testament to how defensive the sector is. You know, if you're achieving 80% in a market as challenging as this one, it does demonstrate, I think it says a lot about the defensive nature of this asset class. So we see this as a short-term issue. Again, going back to the demographics, going back to the yield premium versus risk-free rates. So in the UK now, there's some serious contemplation of negative interest rates, negative gilt rates. I mean, that's quite a remarkable situation for this country as well. So I think the relative value of PBSA will continue to be very well supported.
Andrew, you finding the similar situation?
Yeah, well, I mean, we're predominantly looking at development opportunities. So for us, we have to look beyond the immediate challenges and focus really on the fundamentals, which are, you know, this is the medium to long term growth in student numbers. You know, if we're looking at buying a site now and getting through the planning process if we don't already have planning in place and looking to build out. The earliest we're going to have a new scheme ready for occupation is summer 2022, and it would certainly be our expectation that things will return to something far closer to normal by then. Yeah, absolutely. Our focus is very much on the growth in student numbers that we're anticipating over the next few years. The fact that international students will continue to see the UK as an attractive option, and that they will continue to attend UK universities.
Thank you. And I mean, we've looked. I want to move into. We're getting close to the end of our segment here, and I want to move into. There's a number of questions that people have posed, which is great, and thank you for those that have. We've talked about the UK at the moment. Do you see any growth in the international marketplace moving forward, Raj?
Yes, we do. I mean, we're active in both. We're active in Spain at the moment, shortly planning to become active in Portugal. So we see the European landscape as interesting and complementing the opportunity in the UK. Most of those markets, by and large, are earlier stage markets than the UK market. So the product and the evolution of sort of purpose-built student accommodation, particularly as we would recognise it in the UK, is much earlier on. I think we're starting in Spain to see the most sort of recent current generation of schemes starting to be delivered from 2018 onwards, and we've opened our first scheme in Granada this year, and have further openings next year and in 2022. So we think there is a good opportunity there. It's an earlier stage market, and it's probably one which is where I think one could see a little bit more volatility. I think the landscape is probably, the investment market is probably less defined there than the UK, which is now a very mature market. But clearly we see plenty of room for growth there. The supply side is still largely characterised by old generation stock from a kind of 1990s, 2000s period.
Okay, thank you. I'd like to just move into a Q&A session now. We've got about 10, 15 minutes left. One that's just come in is referring to construction costs in the UK. How are they at the moment? Are they in the current market? Are they up, down, same? How are they going to impact? And I guess linked to that as well is, are we seeing a need for a different design of purpose-built student accommodation to match the needs of the students and the challenges that are being met moving forward? Are we seeing more of that as well?
I'm happy to pick up on the construction cost point.
I threw that over to the floor, so anybody can answer.
We're currently going through tender on a build-to-rent project, so rather than a PBSA project. But just certainly from the landscape, we're seeing construction costs are softening slightly. There's obviously some operational challenges with maintaining programme and activity on site. I think in terms of new starts on site, activity has reduced. There is a degree of uncertainty across various different asset classes, and that's feeding into the construction market. So we're certainly seeing an increased appetite or increased purchasing power, so to speak, versus the contractors, and they're seeing that in their supply chain. So that's what we would expect to see in the market as sort of starts slow down. I think in terms of the landscape going forward, I think there are some risk items on the construction side as well in terms of what happens post-Brexit. A lot of the material supplies are coming from Europe, so I think there's some degree of uncertainty about how that's all going to work post December.
Mm-hmm. Okay, thank you. some of the detail we've spoken about, obviously we've spoken about there's a hugely positive outlook, we feel. We're bullish on that. I think we've all come to that agreement. But how is the pandemic, how's that affecting maybe timings on exits and any other variables on the projects that have been completed and were due for exit soon? Are they, I suppose, Selina, probably more suited to you from the investment side of it. Are we still looking at exits at the same timings?
I think, I mean, the pandemic has definitely had an impact on the timing of exits. Initially, the banks were, as I think as Andrew alluded to, sort of working with helping their existing borrowers arrange loan repayment holidays and things like that. So there was a bit of a pause on bank lending, and that delayed some deals. And then people have been waiting to see what would happen with this academic year. Positive, as we can see, positive all things considered, 80 to 90%, although that's not where we would usually want to be at the time we're selling a building. We would want to be 100% let. And I think any buyer now, certainly whilst we would definitely buy, and we have, we completed on a deal during the pandemic, we would negotiate a rental guarantee. And I think if this second wave in the UK hadn't sort of kicked off and occupancy had been there or thereabouts and it was looking like things were calming down, then I think as a seller we might say, okay, you know, we'll give a small rental guarantee and move forward with an exit. But I think any buyer now, given that there is a risk of impacts to income for this academic year, will be asking, I believe, for quite a large rental guarantee. And whether or not you would want to sell and offer that with that unknown, or hold and wait till things have normalised and maximise the price you receive. I mean, that's something that a seller would have to assess.
If I could add something.
Sure.
Sorry. So I think as well, it depends on who the seller is. So if you're a developer who's completed on a scheme, stabilised it and looking to exit, that's quite different to, I suppose we work with various capital partners, some of them who look at operational assets and to hold them for a significant period of time. If they were to exit now, they'd have cash that they would struggle to reallocate. We were speaking to some of the agents last week and they were, I mean, we were looking for new assets coming on in the pipeline, ones that we could potentially acquire. And they were saying that there's little in the way of transaction volumes because a lot of their advice to the owners is to hold on to it, at least for the short period of time. So if you're a pension fund and you exit and then you've got significant amounts of cash that you have to reallocate, you're going to reallocate it usually within the beds sector at the moment. And if there aren't many deals out there in the market, you're potentially going to have some negative drag on your performance by holding cash.
Okay, thank you. One more that's just come in. For someone coming into the sector who may have been looking at other real estate sectors, how would you help them evaluate, or in their terms, scout for that hidden gem that can fetch the higher returns, and what asset features should be evaluated? I'll open that to the floor.
I'm happy to share with you what we look for.
Go for it. Go for it, Daniel, please.
Well, I don't think there'll be any difference between our criteria compared to sort of this time 5 years ago even, which is looking for a well-positioned asset which has got growth potential. So the rental levels need to be at such a stage where you can have some continuous growth for several years, as opposed to them being at the top end and therefore having reached a ceiling, so to speak. And we also like to look at opportunities where maybe the space is underutilized and there's an ability to asset manage it or have some asset enhancements that we could add in, which over time adds to the capital value of the property. So I think the location, the price point, and any value add is a good trio combination.
Okay, thank you, Daniel.
Matt, if I can add on to that answer. So my starting point would be the university or universities in that city. So look at how the university or universities in that city are performing. So what we've seen post 2012 is that some are doing better and better and some are doing less well. And if you're in a city where the university or universities are growing, then all assets are going to perform pretty well. And if you are in a city where the university is either flat or losing numbers, then only some assets will perform well, is my perspective. So my starting point would be the universities. At the end of the day, we're service providers or providers of services and stock for a demand pool which is created by the university. And if you start from that premise and go from there, and then I would certainly, as Daniel said, look at specifics of that opportunity, how well positioned it is, how well designed the stock is, etc., etc. But my starting point would be the university.
Fantastic, thanks, Raj. We've got a couple of minutes. Andrew, do you want to chip in there and sort of give us a key takeaway from today?
Well, no, I think my colleagues there are absolutely spot on. I mean, first of all, you want to be investing into a market where there is going to be strong and continuing strong demand. So, what is happening with the university? If there are a couple of university markets I've looked at recently where student numbers they've cut courses, and that's only going to lead to reducing student numbers. So that is your first red flag to say, no. It's not a market to be investing or developing into. So what is the university doing? Are student numbers going to continue to rise? Are they attracting above average numbers of international students? And then you've got to look at the micro location. Make sure that the property or the site you're assessing is where students physically want to be. What are the local amenities like, and then making sure that the scheme delivers the right sort of accommodation and the right sort of facilities. So it's a package of ingredients, really.
Thank you, Andrew. Selina, we'll leave the last word to you. Ways and if you had to talk to an investor now and sort of give them an idea, what would that be?
I think it's that for those looking to get into the sector, the fundamentals haven't changed. I wouldn't expect distressed asset sales, but the sort of medium-term fundamentals remain good. I think that in other sectors, in other asset classes, we've seen a huge amount of volatility. Although the sort of uncertainty around income over the short term obviously would impact investor returns for somebody exiting right now, I think from a sort of capital preservation perspective, it remains a sort of good sector to be in for the future and the changing demographic trends and the likelihood of more money coming into this sector in future.
Great, thank you. Well, that brings us to the end of our time. Thank you all very much for joining us today, and for Andrew, Daniel, Raj, Selina, thank you for your insight, your anecdotes, and hopefully we've been able to answer most of the questions that have been posed today. But as I said, we've made a note of them. If we haven't been able to, please let us know, and we certainly will endeavour to do that. But thanks again for joining us today, and thank you all for your insight.
Thanks.
Thank you.
Yeah, thanks very
Okay.
much.
Thanks.
Bye bye.
Bye-bye.